The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 31st. That's right, the end of the month. The terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, you can always let those fingers do the walking. You can always send me an email, steve@tfnn.com, just inside the subject heading. Please put radio show question, something along those lines. And, of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off 27 points, trading at 24,986. The S&P is up 21 points, trading at 2702. NASDAQ up 111. Russell up 10. Semis are up about 8. Trannies are down 37. So a little bit of a mixed board. Gold's up 11 bucks. Silver's up 15 pennies. That's about 1% for both. To the upside, light sweet crude up 20 pennies right now. Leading the charge, dollar-wise, it is Amazon up nearly 60 bucks. So this is pre-earnings. You've got Charter Communication up 42, ServiceNow up 28. Those are 14% moves to the upside. Google is up 2%. That's 24 bucks. To the downside, it is Cimpress NV off 30 bucks or 26%. SVB Financial Group, they're down 9 bucks or 4%. Credit Acceptance Corp off about 840, that's 2%. So plenty to look at. Of course, we want to look at what you want to look at. Let's go to our first question out here. First question, we've got a few, so thanks to everyone that has already sent in requests and emails. First one comes in from James. James writes in, congrats on being named Market Time of the Year. Well, thank you. Appreciate that. I'm curious to get your take on where the market, and James says, let's use the Dow, where the market goes from here. I believe that you said that once the Dow has a close on a monthly chart, over the year end for 2017, that'll be off to the races. With longer-term projections over 30,000, it appears that this is going to happen. Do you feel that long-term money should pile in here? And does this negate any serious decline this year to retest the 2018 lows? As always, appreciate your analysis and insight. Now, okay, so let's take one thing. When I made that statement, James, with regard to a monthly close above the 2017 level, we were in year 2018. So it was a little bit different. So the 2017 close is not anything I really pay attention to in 2019. So just because if you've got that question, others have that question. So I want to be able to thank you for asking that. So I'm ignoring the 2017 close. The 2018 close, well, that's a different story. And we do have the Dow trading above that. So that is, at this stage here, short-term bullish. But let's at least step back. Let's take a ride on the reading and go back and do a little reading of the markets. Because even though I'm negating the 2017 close as being unimportant to me, What we are not negating is what is it? And you chose the Dow, which, you know, that's really, it's a great vehicle for us to take a look at and understand what the markets are doing. And so as we look at this, you're going to see on the panel on the left-hand side, the Dow priced in U.S. dollars. And on the right-hand side, you're going to see the Dow priced in euros. Now, as opposed to all of the other currencies, this way we have a little bit larger view out here. And what we can say about the Dow specifically is that we are still trading within a consolidation on a monthly basis. I think the monthly chart for the Dow more important than the daily noise, the weekly noise, and so forth. Now, if you're watching this on Tiger TV, all that I've done is I've taken the close January, for the month of January 2018. That high was 26,006. You may remember that in January, towards the end of January, then the market moved lower. And what the market did was it eventually set up the consolidation pattern. Now, the consolidation pattern was really the lows of February, which in essence were retested in April. So we had double touch points, so to speak, to set up that consolidation. We knew that it was a consolidation when back in September and October of 2018, price pushed up towards that 26,616. Remember, price did actually push above that level in October. But because you and I use a monthly chart to eliminate the short-term emotion, and instead to try to get the larger picture out here, we can see that price on a monthly basis never closed back above that January high. That was the high back then, and it still is the high, James, to take a look at because we're in a consolidation. And so on a monthly basis, closing over that January high, 26,616, then we would have at least a measured move of the consolidation level. Now, just for blanks and giggles, if we just simply take and measure that consolidation, I'll do this off to the side here. I'll just create a little bit of a yellow rectangle. And if we see a break above, a close above that 2616 level, here's what you're going to see. Because when you break consolidations, whether it's to the upside or to the downside, it provides you and I with a measurement tool. That measurement tool is equal to or greater than the consolidation. If we take that consolidation area and we add that to the top, if there were to be a break, what you're going to see, if we go ahead and we put the line up there, this is not going to be exact, but it's going to be close enough, you're going to see that comes out to 29,837. There's your 30,000 point. There's your 30 number out there. That's how Stevie came up with it. Look, we can go back and we can take a look at all kinds of instruments and consolidation patterns. For those of you that are trading gold, be careful. Gold has made a measured move consolidation breakout. It's made just slightly over it. It's never really just to the T or anything out there. And price can extend higher, but just be aware that in the case of gold on a daily chart, you've got a consolidation measured move completion pattern out there. Now, in the case of the Dow, price in dollars or euros out here, we don't have any kind of a breakout. Interestingly enough, if you take a look at the Dow price in euros, never broke through the bottom of the breakout. Now, when I refer to the breakout, I'm going back to October of 2017 out there, and that establishes the low inside of the Dow price in euros. And take a look at each of the pullbacks here. Take a look at the low back in December of last year, which is simply testing that breakout area. Something to think about. James, we come back from this break. We'll continue taking a look at the Dow because we do want to get the big picture out here. But in dollars, we're still trading within a consolidation. 23,370, 26,6. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's just try to complete that question. I see I've got 4 more that are lined up here, so that have come in by email. So keep sending those cards and letters. We want to see them. As we switch over to this chart here, now we've gone from a monthly time frame chart to a daily time frame chart. So again, on a monthly basis, we're still trading within the consolidation. Perhaps price is going to go ahead and move all the way up to the top of that consolidation. That's what we're going to go investigate at this stage here. What you can see right now, as of 1:18 in the afternoon, you'll see some yellow horizontal lines on each of the equity futures contracts. Those yellow horizontal lines represent the high or resistance of where a bearish reversal candle had formed. Now, the bearish reversal candle in each of these cases had formed the day after where the yellow line is at. They were either dark cloud cover, bear sash candles, and it's the high of the session that marks that. So in this case here, it was the day before. So it's 2677.75. The ES is trading above that. The ES is trading above that. It's got no resistance. It may have price targets. Resistance may form, but in essence here, just taking a look at TAS market profile resistance, nothing exists. Doesn't exist inside the NQ. It's above daily and weekly. It's above the resistance established by its bearish reversal signal at 68.28. That is bullish. What the Dow did today was it has come back and it has tested the breakout area. Oftentimes when you break above resistance, price will come back to test it. So far today, this is a successful test inside the Dow by taking a look at the Dow equity futures contract. 24,830 is the number. If you close back underneath that today, even though it would be below that but above a profile, then it's uncertain as to what the message is. Well, maybe the message of price comes back and tests 24,535. What happens if you close above 24,830 today? Well, there's no reason for price to not continue higher. In the case of the Russell 2000, 1489.70, you're at 1496.30 right now. So in essence and in reality, price amongst the 4 equity futures contracts are all above resistance. Now, what you and I can do is we can use some measurement tools, such as the A to B equals CD pattern. And since it was James that asked about the Dow, what does that look like with regard to the Dow equity futures contract? Well, here we go. We'll go ahead and draw that pattern in. Our A point is the low of December 26. Our B point out here is the high from January 2nd, and our C point is the low from January 4th. What you'll see, or should see, is that prices right now at or above the 1.272 expansion. That number was 68.85. We're trading at 69.16. There's no bearish reversal signal that shows up here. The price should target the next projection area. Not necessarily to the T. Maybe it's to the T, but it doesn't have to be to the T. But oh, I've got the NQ. I've got the NQ. I thought I grabbed the Dow. Sorry about that. Well, hey, you've got the NQ out here. So now you know that the next price projection area in the NQ would be about 70.89. Let me go back to the Dow. Let's do the same thing out here, but let's just try to be consistent with regard to it. So the A point here, again, December 26. Come on, work with me. We're on the air. The B point out here, that's the swing high before there was a pullback, January 2. The C point, that's the low of where that retracement was. You can see that its 1.272 expansion comes in at 25.062, basically about the high of yesterday, pretty much about the high of today. If price takes off from here, you're looking at a price projection. The next targeted area will be 25,742. That's the Dow. What's really important, James, to be paying attention to in the Dow, and this is the question that you and I don't know. Do we see any reversals anywhere? Well, let's go look for them. But before we answer that question, let's go look for them. First, here's the Gartley sell pattern that could exist inside the Dow. We're going to go ahead and get rid of that. You can see the A to B equals CD pattern that's in here. I'm going to get rid of that because what you and I are going to pay attention to is yesterday's high. It doesn't appear that we're going to take out yesterday's high. Of course, it's young in the session. We still have another few hours before the session is over. But whether we do form a new high today or not, it doesn't really matter. Because what yesterday was that the power of 9, that Tom DeMark set up 9, that 9th trading session in a row where the close was above the close of the bar 4 bars earlier. A lot to say, a lot to take in, but it's very easy if you want to learn that pattern, and you should want to learn that pattern. Just subscribe to Mastering Probability. It's free. Absolutely free for the next 14 days. You put your credit card, nothing gets charged, not till day 15 if you decide to stay with the subscription. But you don't have to learn this pattern out here, and you want to learn this pattern. So is there resistance? Resistance is the wrong word. Is there a potential top in place? Yeah, when it comes to the Dow, could be. Could be. Because we pay attention to that power of 9. If we take a look at that power of 9 here recently inside of the Dow, so when I say recently, I'm referring to highs out here. You go back to November the 8th. That was your 8 count. That was 8 out of 9. The 9 took place the following day. Oftentimes that high is going to come in on day 8, 9, or 10. Could be either one. Either of those three works out here. Now, the last time we saw that 9 count to the upside, that was back here. That was on January 16th. Didn't work, did it? That's because you typically have one of 3 things take place. A hiccup, that's what it was a hiccup. Just barely a hiccup. A consolidation, or a change in trend. Now, you might say, oh, gee, Steve-O, that's what I needed you to tell me was one of those 3 things? Can't one of those 3 things happen on any day of the week? And the answer is yeah. But you're more inclined to see the change in trend occur not just any day of the week, but when you get to that 9th count. So we'll want to pay attention to that, James. That would help to answer the question, where does price pull back to? Well, we actually know where price would pull back to. Let's go with the assumption that there's a change in trend upon us. What does that mean? That means, jelly bean, that price would pull back to the low of where count 1 took place. That's that little red dashed line on my screen. That little red dashed line, 4010. But before price gets back there, what else is it that we know? What we know is that Stevie's red line turned green with envy. It did it on January 29th. Yes, that was yesterday. What does that mean? Typically when that happens, well, what it means is that the price oscillator is above zero. Nothing more bullish than a rising price oscillator above zero. That's the conditions that are in place on a daily time frame chart for the Dow. Now, I just said nothing more bullish. Well, now we have potentially competing patterns out here. We've got a topping signal, potential topping signal, and we have something that's bullish. Well, the real bullishness when the line turns green to red or red to green, which is in this case right here, price typically and the red line and the green line here will catch up to each other. Could be a pullback, could be a sideways move, could be a number of different things. The key is when that test does take place, how does price and that red line react? Is it a kiss and tell? Is it a sayonara, see you later, move underneath of it? If it moves underneath of it, then you know you've got that support level at that trading session, the low from January 17th. James, to answer your question, will price pull back even further? If this is a top and price closes below the low from January 17th, you have your answer. And the answer is yes, it pulls back to test that. Otherwise, we're in bullish conditions right now. Steve Rhodes with TFNN. We'll be right back. Bullish conditions without the confirming test. That's what I should say. The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
folks. So, hey, on the line, we have actually Mr. Polar Vortex. Must be Mr. Polar Vortex because he's calling from Toronto. Mike, thanks for calling. Thanks for holding. How are you today?
Yeah, hi. Thanks for taking my call. It's only minus 30 degrees today.
Oh, my goodness. That's cold.
With the wind chill.
Yeah, that's cold. That is cold. Well, good. Well, stay safe out there. And you're staying safe by trading GLD?
Well, I'm out of GLD right now. Just wondering whether or not you see a potential. If you could put the GLD on the weekly.
Yeah.
Spanning back about 18 months.
Yeah.
You see a saucer shape formation. And I got this funny feeling that the GLD and the gold in general is forming a cup and handle formation.
Could be. Now I have to share with you. You would have to take over my screen from here to show the old cup and handle, and then be able to tell people what that means. It's just a pattern that I've never spent any time on to know. But that's okay because you are familiar with that. What might be helpful is for me to provide some additional tools that I have, and then you can kind of integrate the two out there. But at this stage here, though, it sounds like you were in the GLD and you got out of the GLD. What got you out of the GLD? Was it this cup and handle pattern?
Everyone, all the talking heads getting bullish on gold, and the frothiness. It had a hyper move this week, and basically I had to take some money off, money off the table here and go into cash. And I don't see I don't see it sustainable. I just had this funny feeling there's going to be some kind of a swift, quick correction in the gold.
Okay. So let's take a look at, let's just kind of do a quick analysis of gold out here for that potential. Right now it's trading at 1324. And one of the things that I had mentioned during the last two segments was the consolidation pattern that the Dow is trading in. And I said, hey, if you are trading gold, be careful, be aware of the consolidation pattern that's completed inside of the gold contract. And what I was referring to, Mike, so here is what I was referring to is if we take a look at gold out here, between, in this little rectangle box, even though it's extended a little bit further left, here is the consolidation. We basically had gold trading between about 1280 and 1303 for a dozen or so sessions out there, setting up the consolidation. Now, when you break through a consolidation, which gold did on January 28th, it generates for us a measured move. That measured move actually completed yesterday. Was testing yesterday. So first, your inclination to take profits off. Now, it doesn't mean that gold has to stop here, but it is a pattern that completed. And so your inclination to do that says, okay, that makes some sense. Now, the GLD, you may not have been looking at this here, but if we just put the GLD up on the screen out here, and one of the tools that we might like to use are the wave counts. So if we take a look at part of the Chapman wave counts here, we start counting from November 14th. We count from that low. What we're going to find out is yesterday, even though it doesn't show us yesterday because today was a higher high, we're in wave number 7. We're in that 7th inning stretch. You know, if you go to a Toronto Blue Jays game, you get to that 7th inning, everybody gets up, they stretch, maybe you do something else. Well, for us, and I show this in letters here, so it's letter number G, what the GLD is in wave number 7. It's a potential warning sign. So we've got the completion of a consolidation. We've got wave number 7. Doesn't have to be wave number 7. It could be maybe it's 1 or 2 if we start counting from a different swing point. And we can see the GLD is moving higher, doing less relative energy out there. Now, that's not going to indicate that we have a pullback. It's like a weather pattern. I don't know if the weather forecasters in Toronto are as good, really not as good as the ones in Florida. You know, it's a chance of rain. Really? Okay, I get that. But where this pattern is really going to make sense is if there were to be some type of bullish or bearish reversal signal today. Now, on the GLD, you pretty much would need a close around 123, I don't know, 124. We just call it 124. You're 124.74. Don't quote me on that. I'm just giving you a potential where you could see some type of dark cloud cover candle. But if price were to get below my green line of 123.81, that would be your inclination. That would say your inclination was right. There should be some type of retracement. Maybe it's a pullback to 120. I don't know. I don't know on your cup and handle where that works out. But if you were going to sell, I like the following patterns that are in place out here that support that decision, regardless of whether you need it to or not. It just simply supports it. That makes sense to go ahead and take some profits off the table. Lastly, I would just go look and see, how is gold trading in the other major currencies out here? And right now, today, gold made a higher high in terms of euros. In yen, it was pretty much a test of yesterday, but hasn't really backed off a ton. And in pounds, it's made a slightly higher high. So gold is moving higher in all of the right directions with all of the major currencies. Any asset that moves higher in all currencies says there's nothing but buyers. So the question is, hey, who's selling? I get you with regard to the talking heads out there, and so maybe it's a little frothy, so to speak. Other than the patterns you and I looked at, I'm not seeing the signals yet of who it is that's selling. It's not the folks in the UK. It's not the folks over in Japan. And it's not the folks that use the euro. So, I don't know where the selling's going to come from to say that the topping patterns we just looked at are going to be in force. So that's the bullish side and the bearish side for gold.
Okay, see it correct. How far back would it go down? Like just to maintain the pattern maintain the upside pattern. Like how much of a retracement would you see?
The first place I would look for would be the first place would be 1306 that I would be looking at. In lieu of any new information that might form over the next couple of days or something, but 1306 would be a level that I would look at. There'd be nothing wrong with that. 1294, there'd be nothing wrong with that. So those would be the areas that 1273, which is a long way. It's $50. There really would be nothing wrong with that. I'm not forecasting that as the pullback. I'm not seeing. We have these topping patterns, so to speak, in place out here. I'm just not seeing the selling coming from anywhere, any of the normal suspects of where it would come from yet.
Okay, that's fair. Thank you very much.
You bet. Thanks for calling. Stay warm. That was Mike, minus 30 degrees. Folks, the coldest spread that I ever dealt with. I used to own retail stores in tourist areas around the world, theme parks. You guys know that. One of this goes back into the 1990s, maybe 91, 92. And I had a store at the Mall of America in Minnesota, where obviously it gets pretty darn cold. And that was the Simon Group. And the Simon Group was, for the Mall of America, were partners with the guys that had developed the largest mall in the world. That was the Gramasian brothers. And they were located in Canada. Mike probably knows the Gramasian brothers. Now they're on the other side of Canada. They're in Edmonton. And so they were an owner. I don't know if they were half owner in the Mall of America. But my store was very successful. And they said, hey, and I was in McAllen, Texas, looking at a Simon property. And I got the call from Mr. Gramasian. He said, you need to come up here. I need to see you tomorrow. I did go visit him. I left. It was 90 degrees in McAllen. When I got to Edmonton, it was minus 40. That's a temperature change in one day. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 59, S&P's up 18. Hey, one of these days I'll tell you about that story. It's a great story. Of course, I think it's a funny story out there. And but right now we've got five. We got O'Hare Airport on Stevie's phone out here. So let's go attack these things. First, this next one coming in from Glenn. Glenn S. Steve, I'm a newsletter subscriber. Saw your Bob signals. That said the junior nugget is in a breakout buy signal. I got in at $9. Question, should I put a trailing stop at what amount below the current price? What price should I sell it at? Thanks for all you've taught me. What Glenn's referring to when he says the Bob signal out here, I'll just show you this out here. We'll put up, so newsletter subscribers get this each evening typically when it comes to the GDX. Sometimes it's the following morning, but usually it's an end-of-day report. And the Bob system is my nickname for bullish or bearish. And here, if you take a look at this, it's not really a chart. What do you call this? Doesn't matter what you call it. What you call it is a black box signal that tells you the market outlook for either the daily, weekly, or the monthly time frame, and then provides you with support and or resistance levels out here. Could be TAS market profiles, could be the oscillator and change line, Stevie's red line, and lets you know whether there's some type of bottom signal or top signal. And if we take a look at the JNUG, that happens to be about third from the bottom, you'll see on a daily time frame it's in that breakout bull. On a weekly time frame says the bear is over. The monthly says it's still in a strong bearish pattern. So you've got some conflicting signals here. But if you're going to see changes in trend, you're going to first see them on the daily time frame out here. What you also see is that daily oscillator and change line. So your first level of support out here, not that you put your stop there necessarily, but any pullbacks, you're looking for the junior nugget to stop at 10.11. The daily support as well, which is the TAS market profile, it's got $9.36 there. So that's going to be, so your support, now you said you're in at 9. You probably don't want to take a heater coming all the way back to 9.36, but nonetheless, your levels of support are between 9.36 and 10.11. If we take a look at the junior nugget out here, JNUG, one of the other things that anybody should do with regard to perhaps managing the trade is making sure you know what your average true range is. And I've just added that to the chart here. It's the blue squiggly line in panel number 2. And so what you and I now know for the junior nugget is that its average daily price movement from high to low during the last 10 days has been 67 cents. So the very first thing that I would say to you, Glenn, is that this is going to, or has a chance to move on average 67 cents a day. Could be a pullback of 67 cents. That doesn't mean the move is over, and you have to anticipate that. So your stop needs to be, or should be, unless we see some type of topping signal out here, at least 67 cents below, let's say, the close of yesterday, or if you're going to go ahead and move it intraday, maybe be below the low of the day, something along those lines. And it really should be a Fibonacci expansion. 1.272 times 67 cents, or 1.618 times 67 cents. You don't want to put a stop so close. If you put your stop too close, you're likely going to get stopped out. If that's the case, then just go ahead and take your profits, right? Don't let it come back that 67 cents. Don't give that away just for the sake of giving it away. Moving 67 cents in a day, no big deal out here. Remember, that's average. And if you do something average in life, what kind of results are you going to get? Yeah, exactly. Starts with an S. It's not Stevie results. It's a little worse than that out there. So those are the elements that you need to know. Now, what we can also say in the A to B equals CD land is the B point of the junior miners was a trading session of January 3rd. Let's assume it was a full trading session. Everybody was back to work. It was 15 million shares. When price passed this level, it did it on January 29th with 16 million shares, followed up with about 16 million shares yesterday. So it has what we like to say a confirmed A to B equals CD pattern up to 1238. BS. Because before Steve shared this with you, really where this ought to move to is up to the 1352. And if it's going to do that, it ought to just go make a measured move back to the swing point from July 9th, 1496. Now, the reality is here, that is probably the bigger play as to where it is going. And so you've got to make that decision. You're in at 9. Is this a longer term, which I don't know. Is this a shorter term play out here? Watch gold. Because if we see a topping signal in gold, we probably see some type of short-term topping signal inside of Junior Nugget, inside of GDX. Right now, it says it wants to head 1238, 1352, 1496 out there. And you've got some volume behind the move. But we know about the strong correlation between gold and the miners, and so you've got to pay attention to that. So with regard to your stops, just to make sure that I'm clear, 67 cents is the average true range. Some expansion of that, 1.272, 1.618. You know what the daily oscillator and change line level is. You know what the TAS daily support levels, and it'll be in this evening's update out there. So you can use those levels and then make your own risk management. With regard to where you're exiting, really in this trade here, you're targeting that $15 level. So thanks for being a subscriber, writing in, and best of luck, Glenn, with that trade. Nick writes in, hey, Steve, hope you're doing well. I am, thanks. Hope you're doing well. So I see your frequent visits to the doctors. This is called January maintenance out there. So every 5 years, and I suggest that I'm not saying anything that anybody else doesn't hopefully do out there, but every 5 years, you ought to really go get all the plumbing checked. And that's what I've done during the month of January. Clean plumbing up here in the heart, clean in the lower section as well. And that is a beautiful thing. Because I live in Florida, in case I'm out in the sun, yesterday was a run over to the dermatologist. Hey, check out the body, make sure there's no skin cancers, all those kinds of things out there. So nice to get that done and out of the way for the year and get the all clear when everybody says, hey, come back 5 years from now, unless something goes wrong. So question, if you were in TQQQ, where would you exit it? So the TQQQ is is TQQQ. Let's put that up on our screen. Where would you exit? Great question out here. How are we going to answer that? So we're going to answer it a couple of different ways. One, and I don't know where you're in at. As long as the NQ, the equity futures contract, trades above 68.2825, I'm not seeing a reason yet for you to go ahead and jettison that position. You're above resistance. So that's a beautiful thing. Let's take a look at the trend lines out here. Let's go take a look at the trend lines in the NQ. And this just says the sphincter muscle of the bulls may be getting, speaking of sphincter muscles and last Friday out there, in any event, if we take a look at right now, what the NQ is doing is moving up towards a resistance area. And that's this little trend line. That's a little trend line really established from the high of November 8th to the high of December 3rd. Price doesn't have to stop here. If it makes sense, it's like a rest area. It's run into resistance. Maybe it just ran into the bathroom, so to speak. Going to come out, and it's going to resume its way on its highway up to 70.69. So that's a possibility. That is its horizontal trading range level out there. Your question is, where would you exit? I wouldn't exit until I see some type of bearish reversal signal. Here's the equity futures contracts. Your resistance on the NQ and your resistance on the Russell. I mean, just pay attention. Just pay attention. That's all you got to do. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Folks, let's try to get to these. So Tim writes in, he says, hey, he wants to know about SOXL. He was asking about TQQQ, so we've already taken a look at that. He's long. If we take a look at SOXL, you can see just like in that TQQQ trade, you're up at a potential resistance area. These yellow diagonal lines on my screen out here. If you take a look at this ETF, January 25th, you were up with 1.1 million shares. Today, you're up with 488. It's not like it's taken it out in a blaze to the upside. Be careful. Got a time to mark set up, 9 count on the Dow. You're up at resistance inside the semiconductor 3X bull. You're up against that inside the NQ. Doesn't mean price stops there. Again, just means really pay attention out here. If there's going to be reversal, we should see it occur pretty soon out here. Doesn't mean that it will. If we take a look at Nick, Nick writes in and says, when sometimes see the signal. What? I don't see what you're asking for, Nick. I apologize, but your email doesn't tell me what specific instrument. So I'm going to move on to Brent in California. Could you take a look at light sweet crude? Looks like a potential failure in the making with a shooting star candle. So if we go take a look at light sweet crude out here, and he's referring to the daily time frame, and that does look like a shooting star. I don't have the chart up on my screen. It's going to take longer than the 30 seconds that I have. Here's what I would be looking for, Brent. You have support, and I'm just looking at the TAS market profiles right now, and we're looking at the daily time frame. And yes, you've got a shooting star. That alone does not necessarily. Now, if it's at the end of a pattern, okay. I don't have the wave. I don't have anything out here to know if we're at the end of the pattern, but you probably do. You'd pay attention to that. That just means that price might pull back to support. Support inside of light sweet crude, it hasn't even gotten to the first level. You need to see it close below 53.63 to then suggest 51.75 would be the number. So I hope that helps you out, folks. Thanks so much for for being here. Stay tuned. Your favorite polar bear, David White, he's up next. I'll be back with you on Fabulous and Fantastic Friday. Hope I got to everybody's questions out there. If not, I'll make sure we get to them tomorrow. So have a great afternoon. We'll see you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.